Let's now connect with Mr. R.K. Saraf, CFO and DMD of State Bank of India. Mr. Saraf, good morning and thank you for joining us. Now, State Bank of India last week has informed exchanges that the company is looking at raising fresh Tier 1 capital via a preferential issue. So, could you be more descriptive about it? How soon are you planning to raise money via the preferential issue?
Yes, in fact our capital raising plan includes, one part is that the government will infuse 2,000 crore rupees, and that is preferential allotment, and we are having a general meeting on the 30th of December, so within 15 days of that we should be having this 2,000 crore rupees coming from the government. The second part of capital raising is that we have sought government approval that if they agree to dilute their stake, we should be able to go public, possibly a QIP issue, or otherwise as approved by the government and the Reserve Bank of India. And if the approvals are in place within a short period of time, we hope to conclude the capital raising by this financial year.
Looking at raising 2,000 crore from the government, and additional to the 2,000 crore you would test markets. Is that what you're indicating?
That's right. In addition to 2,000 crores, we'll be having about 9,000 up to 9,600 crores or so from the market. Now this 9,006 crores is premised on the fact that if the government, how much the government agrees to dilute. That is to what extent their stake comes down. And in case it comes down up to 58%, then the maximum amount we can raise is 9,600 crore rupees.
Does it make sense to raise money from the market when State Bank of India stock is trading at a historic low? The stock is trading at not 2 times book, it is trading at 1.5 times books based on next year estimates.
Yes, indeed, this is trading at one of the lower valuations. But the fact is this, that their Basel III requirements have kicked in. They have become effective. What RBI has suggested is a little more than what Basel Committee has suggested. And we in turn, in line with all international banks, we in turn would like to have a capital ratio which is above what RBI has said and in line with the international banks. So what our aim is, we would like to keep the CET1, Common Equity Tier 1 at 9% and overall capital at 12%. So for this purpose, if we have to continue to grow, we need capital. And therefore, it's important that we raise this capital, we capitalize our bank adequately, fully in line with the international banks, so that we don't have any growth constraints in the years to come. So that is the primary purpose that we are raising this capital. And this capital will be value accretive, we are sure about that. And as depending on our bank's performance and the market perception, possibly in future, let's see how the stock performs.
Mr. Saraf, how much dilution would this capital raising exercise lead to in your stock?
As I said, dilution in government holding?
Talking about is if and when you do choose to tap the market, how much equity dilution would it lead to?
Yes, so when we choose to tap the market, actually it will depend on how much the government has agrees to dilute the capital to, so their stake. So right now, before infusion of 2,000 crores, it is their government stake is 62.31%. After 2,000 crore is received, their stake becomes 62.9%. And in case they agree, the government agrees that their stake will be reduced to 58%, then the government stake will be 58%. Others will be remaining 42%. And then we will be in a position to raise something like 9,600 crore rupees from the markets. In case the government agrees to reduce to a lower amount, a lower stake, then of course that is the reduction is lower than what we envisage or what we have requested, then to that extent our capital raising will be.
So what is the plan B in case Government of India decides that they don't want to reduce their stake in State Bank of India beyond 60%, because you need money to grow, you need fresh Tier 1 capital to comply with the Basel III norms. How will you raise money if government decides that, look, we are not interested in reducing a stake in SBI?
Okay, it's too early to say that. I think this is premature for me to comment at this stage, because the indications from the government have been that they are very much interested in seeing to it that State Bank of India, public sector banks, they are in a position to grow. So I'm sure that the decision they will take will be in the best long-term interest of the bank.
Fair point. Mr. Saraf, we've got an RBI policy as well coming up this week. What's the sense that you're getting? Will we see a hawkish stance from the central bank this time around, and should one gear up for a 25 bips hike in the repo rate?
Now, when we talk about RBI policy, so one primary factor that has been, like it was also enunciated in Q2 review, that inflation has been a primary concern. But of late, we have seen some good trends. Inflation has, especially the food inflation, which had been keeping the overall inflation high, has moderated. And we expect that as the new crop comes in, as the new harvest comes in the market, and also there have been signs of vegetable prices coming down, as also the external factors are now far more stable. So possibly the possibility of rate hike have receded to somewhat, though we do not know what RBI will do. And importantly, I think equally important to banks would be that not only rate hike, from the liquidity angle also, what measures RBI could take, whether if in case they are going to have some more liquidity measures which might improve liquidity, then that is another factor to be looked at. But coming back to repo, what I would say is that as of now, primarily if you purely go by what inflation has been, so we do see that the signs are positive that inflation being under control. Our CAD also figures that are coming out. So I think from the external factor, the worries have receded. And RBI has been conscious of both inflation, and I'm sure the growth part also will be taken care of.
If the RBI does hike rates, Mr. Saraf, by 25 bips, would it be a fair assumption that you guys at SBI as well will hike your lending rates?
Actually, the transmission does not take place immediately and linearly. This we have seen in the past. The policy rate is one of the factors that go into deciding the base rate. There are several other factors, and not the least of which is liquidity. So depending on A, policy rate, B, liquidity, C, market condition, D, what is the cost, our overall cost and including cost of deposits, then a view is taken on what should be our base rate. That should be go in, how much transmission will take place. And if we go by the historical trends, the transmission has not been perfect. This is for the banking system as a whole. So therefore, to say that if RBI raises by 25 basis points, are we going to follow suit, raised by 25? No, it is, the answer is, I don't have a straight answer to that. And as I said, it depends on so many other factors as well.
Right. Mr. Saraf, Ms. Bhattacharya has gone on record and she has indicated that the kind of credit growth numbers what State Bank of India has reported along with the Q2 numbers, that is a blip. That was an aberration. A 17-18% credit growth rate is not we should expect from State Bank of India. But that she indicated after a Q2 numbers. Have things improved after that? Is the credit demand coming back?
I will explain what is the context of that. Now, for the half year ended September and YOY, we had a growth of 19% in advances. And that is something more than what has been our trend. The reasons are many. That one, when we look at YOY figures, last year we had a lot of refinancing done of very highly rated borrowers. So that pushed up our corporate loan book. Second factor was that, as you are aware, there was, because of the higher rate scenario around September in the markets, the CP market had nearly dried up, and that pushed a lot of corporates to the banks. So those corporates who had loan limits with us, as also with other banks, they chose to draw on the loan book, their loan limits. And that was the reason that when we looked at September figure, we found that the growth was very high. Subsequently, what has happened is that this demand has moderated. The CP market is again coming back, and we don't see many large projects in the pipeline still. The demand continues to be, I would say the demand for loans continues to be moderate. So our sense is that by this year, State Bank of India would be growing maybe just a little above the industry average. So ASCB growth rate in advances, it could be between 14 and 16%, and State Bank of India could be a shade over that.
Final question. SBI
and
stock
I
has
may
recovered.
also add here that while the advances...
Right. Fair point. So final question. I know we are extending our appointment with you. Your stock has appreciated from levels of 1500 to 1800 because markets expect that things will change for State Bank of India. But as a manager, as a CFO of State Bank of India, what is your assessment? When will that big turn come for SBI?
Let me put it this way, that we are trying our best. The bank is very conscious of what it needs to do. And there has also been, now we have reviewed what we need to do. So our focus today is A, on quality of advances, B, on margins, C, on cost reduction, and D, on containing stressed assets and NPA managements. And I think we are achieving results in all these areas. It would be presumptuous for me to say that this is going to happen anytime very soon, that everything is behind us, all the bad things are behind us, and we are firmly on a growth path. But we are planning, and the plans that we're executing, and in the entire bank is behind this, that given these focus on these primary factors, our performance should be improving. And also another factor not to be forgotten is that State Bank of India is a proxy for the Indian economy. Now, I won't say that the worst is behind us or that we have reached the trough, but we may be very close to it, or possibly the trough is behind us. It's only the next couple of quarters that will show us. So only when we have similar performance in the next couple of quarters, that is NPAs which have stabilized or even reducing, and our advances are growing, our margins are growing, then we would be able to say that yes, the worst is firmly behind us. But we are quite hopeful of the future.
Asset quality stress in the coming quarter as well?
The stress continues. So I would not say that the stress is behind us. And this has been a combination of many factors. And many of these, a large part of these are external factors. So as we say the economy improves, the GDP grows, and the external clearances come in, then the projects which are stalled will get going, and as the confidence regains, that will happen. Another good thing that has been there is that this year the monsoons have been very good. The distribution has been excellent. So we do expect that not only Kharif but Rabi crop will also be good. And that will really put some money in the hands of the hinterland, people in the hinterland, and that is definitely going to contribute to the general growth. And also lead to reduction in NPAs in these areas. In fact, just to share with you, we had National Lok Adalat where all banks had also participated on 23rd November, and the response was phenomenal. That is, the number of people who came forward to settle their cases, it was tremendous. So we are quite hopeful that going forward we do see some kind of traction coming in here. So as I said, I'll be cautious about saying that whether the stress quality is not behind us, but things seem to be going in the right track.